Cool, cool. So in today's class, we're going to be looking at position sizing. So we
Mhm.
started a couple of days ago. We started looking at position sizing using the twin course experiment. Um,
Yep.
and I think you saw the impact of impact and magnitude that a position size would have in a portfolio,
Yeah, yeah, yeah.
given a round of um, given a round of or rather a good enough sample size of trades, right? Because
Mhm.
again, the order in which wins and losses come at you is going to be random. So you want to manage the impact um, they have, particularly the losses, the impact losses have on your bottom line. So you want to minimize that to remove this guy right here, to remove that big loser, right?
Mhm.
So what are we going to be doing today? Do I hope you have this formula written down somewhere. So we're going to be uh, um, focusing solely on just position sizing, right? So what's going to happen? We're going to go to, excuse me, we're going to go to a trader's gym, right?
Mhm.
And I will be the one trading.
Okay.
Yeah, I'll be the one trading. However, you are the one telling me how much size to put on.
Let me just get my calculate.
Cool.
Cool, cool.
So you are going to be the one telling me how much size to put on. Um, so for the purposes of I'm going to continue to trade the way that I trade, right? So I'm going to tell you that I want to buy. You just tell me how much of the stock I have to buy, right? However, we're not going to be using my position size algorithm to its fullest extent. So we're not going to be scaling the size as we find ourselves in winning position. In fact, we're not going to be tracking the 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 current risk on the trade, whether in profit or still in loss. So we're only gonna, as usual, only gonna be adding if the stop loss is above the last entry point, right? Which means at the at the at the point at which we're taking the trade, there will be no impending risk coming in, right? So a worst case scenario will be creating more risk as we build up a new position,
Cool, cool, cool.
right? For example, we might find ourselves at break even, which means there's no risk on the current trade. But if we put on another trade, now we push that risk back down to negative 2%. And then again, when we do it again, maybe we're sitting at a 2% profit, but then when you add a position, it pulls us down back to say zero to break even. So we're not going to be scaling the position size. We're just going to keep 2% constant to
Okay. Okay.
to our cause. Got it?
Cool, cool, cool.
Cool. So let us go to the trader's gym. Let me close this off and log into my gym. Right. So let's get rid of all of these. I am going to pick a random stock. Let's go with, I want one. Do you want to help me pick? Let's go with Pearson. Let's go with Pearson.
Okay.
Um, I'm going to do that. We're going to work on an hourly chart. That's fine. Let me pull my moving
But
averages.
balance is 161,094.17.
Yeah, the balance is 161,094. think it's basic. No, that's not the template. That's not the template. I don't even know what these things are. Okay, new add my indicators 50. Yeah, that's fine. Right? So let's get going. This is a mighty ugly chart. But surely that. Oh, that's some volatile chart.
Yep.
That's some volatile looking like chart. Waiting for my 50 EMA to kick in. There you go.
Yeah.
So I'm gonna wait for that. There you go. So I will. This is an ugly looking chart, man. Okay, cool. I'm entering. My entry is at 79860, and my stop. I'm setting my stop at 74750.
798.6.
Yeah, my stop loss is at 74750. How much am I buying?
747.5. You're buying 63.05.
Okay, just say 63.
Yeah.
Cool. Gotta be careful with moving my stop in this one because it's like a mighty volatile one. Okay. So if it breaks, um, 837, I'm going to add.
Mhm.
I'm going to raise my stop loss. Let's
Okay.
see where that swing low. 50 fails to protect. It's really good. That level is not a target. 200 is holding its own very nicely.
Mm-hmm.
Nice position graph from the 200 is holding. Going to be getting stopped there. Or maybe not. Golden cross. I mean death cross. I think we could be getting stopped. See how this range holds up. Now we're in a consolidation range. Breaks on the upside.
Mm-hmm.
Now let me raise my stop loss to reduce my risk a little bit. Raise my stop loss to there. Perhaps there slightly better. I'm a bit cautious with my stop loss because of the volatility that we're seeing when we first loaded the chart. So I'm a bit cautious. I don't want to
Okay.
golden cross. Okay, hold that for a second. I'm gonna wait for that. Duplicate that. Second. So the reason why I like placing I call it pre-stops, right? I
Mm-hmm.
like placing my stop loss before the event that triggers me to raise my stop loss actually happens. That gives me an opportunity to test that level
Okay.
if it's a valid level, right? So what happens is the longer that level is not touched while I'm waiting for my breakout, the better, right? Because I know that if it breaks higher, if it breaks the level that I'm waiting for, and comes back to my pre-stop, I think at that point I would have risen my stop loss. Um, I know that that's a safe place to place the stop loss because if that low is taken, I want to be out anyway. So it gives me
Okay.
a level of confidence to watch the market fail to take out that low for an extended period of time,
Cool. Cool.
right? Like this level has been holding pause. Now that we had that break there, I can raise my stop loss. Because look at the amount of time that and I have 200-day exponential moving average to protect me.
Cool. Cool.
So I'm sure I have like a 0.5% risk now as we speak. But we'll get into journaling at some point in the future, but it's not. So now it's taken. Oh god. Now okay, now I'm stopped. Cool. So take I think it's a 2% loss.
Mm-hmm.
So so what is our 2%?
Percent of the balance.
Of the initial balance, which was 160 something.
6 1. Let me just check.
Well, you didn't pen it down. Let's start to do that. Let's start to.
I did.
Oh!
2% is 3,221.
Huh?
2% is 3,3221.
Okay, so we took a 1% risk. So because we took half of that, we took a one
Oh,
percent
okay.
loss because we raised our stop loss. So that's great. That's great. So now I will be waiting. Let me do that. I'll be waiting for that resistance to break
Mm-hmm.
because I don't think it will do anything significant below that level. So nice strong break, but it was with a doji. So I'd rather wait. And when I look at, we have a nice high close there. So I'm gonna wait for that. I'm gonna wait for the market to close through that. It's not closing with any level of conviction, man. I want a strong close, man. I don't want to be. Once I find myself doing this, I don't like those type of breakouts. Like if I have to zoom to see if we close through, I want it
Mm-hmm.
to be as clear as day, like that. You know, I want it to be clear like that. So my initial stop is at 809.50.
Okay.
What's wrong with this? I did it. Balance is 159.3.
With the stop is 82954.
Yeah, 8095. No, 80950. 159.
809, and then the entry is 82756.
No, 831.
Oh, okay.
827 is a resistance level. My price point is 831.
Then let's see. 8.5. So it has to be 149.
149. I buy myself 149 shares. Perfect. Let's see. That looks good. Is that broken? That looks perfect. So at this point in my context, we're at new highs, right?
Mhm.
So I wanna zoom to a higher time frame so that I can get my boxes in my range and to see if there isn't a chart pattern I could use um, for the next level to place my stop loss, right?
Mhm.
And here you can see a nice cup and handle pattern, right? So this is the cup, and that's a small handle and a breakout there. In fact, the breakout that we entered at was a nice cup and handle breakout on
Okay.
the 4-hour chart, and then I take the height of that, I project it to the upside.
Cool.
Right? So now I'm going to wait for, I'm targeting 875. However, if the market gives me, because look, man, that's some distance, right? So if the market
Yeah.
gives me, keeps reacting in between then and now, I will adjust accordingly. I will adjust myself accordingly. Okay, I think we don't need to do that. Cool. So now we have a reaction. So once we have, I want to mark that reaction. I want to see how long it holds up. 50-day coming to the rescue. Nice. This is a nice reversal pattern. This is a nice reversal pattern. And a doji testing a significant moving average followed by a bullish engulf, a green bullish engulfing candle. Like this pattern. I like this reversal pattern quite a bit.
Mhm.
This time it failed, but it's a pattern I like. I think we lost um, the full 2% because we
Okay.
lost 4,000, 4,000. What is this? 4,453.
Okay.
Is that 2%?
Yeah, no, let me just 129.
And I'm sure it's a little over 2%.
This is on the 129.
So it's
155.
4,453 divided by 159.
3.1.
583. That was the, yeah. That's just over 2%. We do that. It's 2.9%. Yeah, 2.8%. I suspect that has something to do with slippage.
Mhm.
And the yeah. Eh, one, cool. So I'm still waiting for 843. One of
Mhm.
those chances. Stock is stuck. The stock is quite volatile, man. There you go. So I will stop loss. I will give it a bit of room this time. So my stop loss this time is at 812.
812.05.
Yeah, 812. 812.05. Tell me how much I'm buying. My balance is 155, 129.
994.
Just 8. I said 194.
No, 94.
94. Cool.
Yeah.
And then actually want that level to be my stop loss, but we've seen how the stock move, man. We've seen how the stock moves, so we want to be rather patient with that. See that level is holding nicely as support.
Mhm.
Okay, drop it down a little bit. Cool. So on that break there, now I'm comfortable with I can trust the 50-day to protect me. But again, because of that volatility on this stock, for now, I want to in fact let me just be a bit ballsy. Right? So now my stop loss is at 829.60.
Mhm.
Let's see how that goes. That doesn't look really good. I'm so bossy, but you get off me. Cool. I raise my stop slightly again. Having that, 50-day cushion in me. See how that goes. Let's see how long that holds up. Okay, now that is interesting. That is interesting. Markets and memory. So you see, if I was taking profits,
Mhm.
that target was hit.
Okay.
That target was hit. Okay, another loss, but this time is a 1,200 and so this time it's 1,273.89 against what was 155, 129.8%, so just under 1%.
Okay, cool.
So see, cool. Just gonna use that as well. Okay, so now I'm gonna wait for it to come back above. This was not a good start to pick, man. This was not a. It's a cheese grater, man. You can see the trend is upward. It's bloody thing is a cheese grater.
Yeah, no, really.
So now it's been dropping, so I also dropped my entry point. It's been flattish. Nothing good happened over the 50 day. I mean, under the 200 day. Yep. Okay. My stop loss is there at 829.50. So how much am I buying?
And one.
29.50.
Buying. You're buying 149.
149.
Mhm.
Okay. Let me see. 1, 2, 3. Okay. 1, 2, 3. So far we have 3 losses back to back.
Yeah.
Okay, I missed that, and the market just collapsed right in a heap. Okay, that's what I'm. So raising my stop loss, not able to position as yet. So new highs. How do I handle new highs? Let's get rid of that. So now we'll bring doubles back in.
Mhm.
Okay. Well, yeah. That's all that. Cool. And also my stop loss to be there in the future. Hey, that was a massive gap. That was a massive gap. So they, let me see. Don't think this thing has refreshed. 1, 2, 3. Don't think it has refreshed this thing. Let me do this and do that. So that last loss, the last show we bought was 94, ne?
Oh, 149.
149 was this one.
Yeah.
Why is it at 8 to 1?
Oh,
Okay.
where is it? The other date ahead.
849. 849. That would be this 94 one. Because that's where we entered. So that would be this 845 price. Our last entry.
Okay. Okay.
No man, I think the last. Okay, let me do this. Let me do this. Something about open time.
I remember us doing 149.
Close time. symbol PSN is going to be very far. Okay, I can't find that last loss.
Because the stop loss was at 829 and we entered at 8.
Oh, I can't use these as well. Let's use symbol and look for PSN. There it is.
And so that is the last one.
This is the one. This is the one, right?
Mhm.
Yeah, there you go.
Yeah.
So last 1, 2, 1, 2, 6, 6. Ah, I suspect that's just under 1% as well. Just under 1%. Okay. Now we've had, let me see, 1, 2, 3, 4 losses in a row. All right. Cool. If we take the next loss, if our next trade is going to be a loss, what I want to do is reduce my position size down to 1%.
Okay.
Right. So if we get another loss this time, reducing the size down to 1%. Why? We want that in fact reduce the size to 1%. I'm calculating.
Okay, cool.
Yeah. Why? Because I want to reduce. I can see that I'm out of sync with the market, so I want to reduce my drawdown.
Cool, cool.
Okay. And that's one of the things that you want to be doing when you find yourself in a drawdown where the market is just out of sync, and you
Mhm.
just getting hit for stops and the like. You want to reduce your position size. Why? Because you want to be available when the tide turns. You want to be sitting in decent amount of capital when the tide turns.
Cool, cool, cool.
Yeah.
No, makes sense.
Stock is how this stock is having a smooth downtrend and a volatile uptrend. That's weird. That is weird. So now we're back above 200, which is good. Let me pause there for a second. For ultra. Let's see how we look here. It's a messy chart, man.
It's a good one.
Golden cross. Perfect. Let's drop that in. Yay! Very cool. Okay. Let us initial stop 820.83. 1%. Put on 1%.
823. Okay. This is 3 point. Cool. So we have to buy 35.
35. Okay. Just put that. Put that level. Let's see how big, how small was that loss. I think it was just a 1%. How much did you buy? 35, ne?
Yeah.
Yeah, there it is there. I think it's roughly just over 1%. That's that 2,000 I lost there. Like that. Oh, I
35%.
mean that was a forced breakup. That was a bull trap.
Mhm.
Let's see if we take out that 780. Subtract that. It's like the right side is the best side, man.
Yeah.
Ah, that's
Yeah.
That's why I don't like lower time frame charts, man. They messy.
Oh, this is an hour time frame.
This is an hour time frame.
Yeah. Okay.
You should have picked the daily chart. How comfortable are you now with the lazy? You've been practicing it.
Yeah, no, I think I'm okay with it.
Okay, cool.
Getting better with it.
Okay, so tomorrow we will be continuing. Oh, look at how smooth that downtrend was.
Yeah, it's
But when it
going
comes to the
down.
upside, all of a sudden it picks up volatility. Pretty messed up. Anyways, so tomorrow we're going to be looking at you're going to be trading the lazy again. Now we're going to put position sizing in order.
But tomorrow, I'm actually, it might not be
Oh, okay, not a problem.
available
On
in
Monday.
the morning. Yeah,
On
I'll
Monday.
be driving towards it tomorrow.
Yeah.
I'll be driving in the morning tomorrow, so
Oh, okay. So on Monday, or maybe because I'm off at work tomorrow, so sometime during the day, you can let me know. We'll have a chat. We'll have a chat around that. Um, but you're gonna be okay. The next time we're together, hey, we almost missed the
we
golden cross.
could do lunchtime tomorrow.
Yeah.
So we could do lunchtime tomorrow.
No, yeah. We'll chat. We'll chat. But we're gonna be looking
Cool.
at the lazy. But adding. So remember, we've been looking at lazy. Just looking at the perfect trade, right?
Mhm.
With position size excluded. So now we're going to
Okay.
include position sizing, right?
And stop losses.
Yeah, so we're going to include position sizing, and you're going to use your intuition. You're going to have to trust yourself to place your own emergency stop loss,
Okay.
right? So you're going to use your intuition to place your emergency stop, but we're gonna be now adding position sizing to the lazy,
Okay, cool, cool.
right? And then after that, we're gonna have a closer look at stop loss placement. So
Okay, okay.
we're gonna do the same thing that we're doing today, except now you pick. In fact, let's do that tomorrow. Let's do that tomorrow. We're gonna do the same thing we're doing today, ne?
Mhm.
We're gonna do it on a daily chart because it's smoother and whatnot. But you now going to be picking stops and
Mhm.
position size. So you tell me where the stop is. I just decide where we entering.
Okay.
So we're trading together now. I decide where we're entering. You tell me where the stop should be, and given where the entry is, you tell me where the stop should be, and then you tell me how much size to put on.
Oh, cool, cool,
Right?
cool.
So we're going to be training your eyes to pick up places where to place stops, because that's going to be critical.
Cool,
Right?
cool, cool.
Cool. Golden cross. Uh,
Do you take the last day of the month off? I mean,
Pardon?
last Friday. Do you take every last Friday of the month off? What?
No, it's just coincidence that it happened that way.
Oh, okay.
It's just
Ah,
coincidence.
cool.
Maybe I should do that. Maybe I should start doing that. Holy smoke. Holy shit.
That's quite something there.
Holy shit.
Yeah.
I wonder
Seven,
what the hell happened with the stock during this time.
600.
Jesus. I think the low is in though. I think the low is in.
Mm-hmm.
I think that's our low. I think that right there,
The low point.
that's our low. I don't think that's gonna get taken out. Yeah, I don't think that's gonna get taken out. I really don't. I think there was a bit of buying coming in there. Oh, look at that. Look at that. How wrong was that? Again, you see how I felt around this level, particularly when it was flatlining,
Yeah, yeah.
that the low was in, right?
Mm-hmm.
So when it comes to trading a live account, right? It's slightly easier at the moment to just look at that and let it be and not do anything about it, right? Because it's a simulator. There's no capital at stake, and B, I'm a fairly disciplined trader, and even if this was happening in real life, I wasn't gonna act. However, the feeling of this is a low, despite key rules being contradicted, let me enter anyway. So, for example, you look at the 50, you look at the 200, the inverse. But here you're thinking, oh boy, I can catch that rally if I catch this low. What do? You change from heads to tails at the wrong time. You see, you abandon your strategy and you say, you know what, I'm going to catch this falling knife, I'm going to pick this low up. Because you can
Okay.
see, you can see it hit a low, came back, it wasn't taking out the low, and it was just flatlining. Now sellers just were drawing out. And remember, you're not privy to all that price action. All you have is this. That's all you get, right?
Yeah, yeah,
And you're looking at let's just for the sake of argument, this is a daily chart, right?
yeah.
Let me just drop that a little bit. Let's say, for the sake of argument, this is a daily chart, right? And you're looking at this at this stock intraday. When that happens, see that doji here, a trap there, right?
Yeah.
At the time, while it's building that wig, it looks green. It looks like these candles, which is breaking. It looks like that one. It looks like that one, which is breaking above that 50-day exponential moving average. And you remember, you've convinced yourself that the low is in. Look at those couple of dojis followed by a bullish engulfing candle. You think, you know what, the low is in. It comes back here. It doesn't. It doesn't take out the low. You're now convinced that the low is in, and you don't want to miss the bus, and then you jump in. And you jump in size because you think it's a low risk trade. See why discipline is important.
Yeah. My feeling.
Discipline is very important because you're going to pick this up in size thinking the risk is low.
Yeah.
And you're certain the low is in. That's why you need to separate yourself from how you feel about how a chart is behaving and the rules that you trade. You need to have a level of separation so that you become the observer of what you're doing.
Yeah.
So your trades are not guided by how the observer is feeling, but how the rules of the system says. The only thing the observer is doing is just to observe, and nothing more, nothing less. It's just to observe, to and pick up things there that you need to learn. Observe how you're trading, observe whether you're disciplined or not, etc., etc. Just to observe. Don't trade on your emotions.
Yeah.
Trust me, they will take you to the clinics. They'll be right from time to time. Like, anyone is going to be right in the market at random, just pure randomness,
Yeah.
right? So your emotions will be right from time to time, but do not
True.
break your rules, man. Let's proceed. Yeah, but I still do think that low is in. I think that low is in. Still think that low is in. But
Seems like it.
even when I think that,
Mhm.
right, I must wait for all my rules to be checked.
Yeah.
Because that could have been much worse. That swing low there
Mhm.
could have been much worse. Right? So
Yeah.
I gotta be patient. Trading, just as in music, trading is a space between the trades. Just as music is
Mhm.
a space between the notes. Trading is a space between the trades. What kills a lot of traders is simply doing, in fact, what kills a lot of traders and investors is the inability to do nothing. Doing
Mm.
nothing is insanely hard. You see,
Okay.
but what traders and investors forget, right, is that cash is a
Mhm.
position,
Yeah.
right? You're better off earning interest in this type of market. You're much better off earning interest in this type of market. You know what I mean?
Yeah. No.
Cash is a position. You don't want to be getting your head beat down simply because you just want to do something. There'll be
Yeah.
periods extended. Imagine if this was a daily chart, man. Look at how many candles these are. This is a full year.
Mm-hmm.
You do nothing on the stock. Nothing. Absolutely nothing. Doesn't matter how you feel about the stock. Doesn't matter where you value the stock. You do fuck all. For a whole year. 351 candles. Doing nothing. Absolutely nothing. Why? This is why diversification on the instrument you're trading is important.
Yeah.
Right? Whereas if you're only trading PSN, man, you've had a whole year of doing nothing. Which on its own is not a bad thing. But to keep your mind sharp, to keep your trading sharp, you need to be trading here and there. Maybe trading accumulates during this period, or you're looking at the same setups on other charts. But on PSN, you do fuck all.
Yeah.
Because this could have been easily a Citrix 40 chart, and you've told yourself that as a beginner, I'm only going to trade this index and I'm going to do nothing else. And then the top 40 does that, goes nowhere for a whole year. And then what do? Fuck all. Nothing. Zero. You just watch. Right? Patience, man. Patience is key. Patience is bloody key. So now we have ourselves a golden cross. That could be a fake one. But nonetheless, we don't judge. We're not a judge of stocks, man. So we come back. Okay, I'm gonna wait for that to break. If that breaks, I'm in business.
Yeah.
Okay. Stock is starting to make higher lows, and I like that. Now it's forming a nice uptrend. Nice. A nice uptrend, right? Oh, that was not it, man. That uptrend was not it. Patience again, patience. I think we've reached the end of our simulator. Oh, sorry, it's just me. I think the market has sold enough. Look at the tug of war. Um, there you go. So now I'm going to build a position again. I'm going to put my stop there at 599.55.
Yeah.
Remember, 1%. 1% still. Sorry, my bad. Let me give you the balance. 154.98.
Okay. Okay. 36.6. Stop loss is how much?
599.55.
We have to go 40.
Yeah?
We have to
How
go
much?
150. 40.
40. Perfect. It's what is that? What? Now it's my trading. So let's check. There you go. There you go. Okay. So that breakout we initially waited for has been taken out, right? I raised my stop loss. Let's see how that. So now that then becomes my new entry and my stop loss there. Wow. So we're taken out there. Let's see. We're back flatline. Hey, time. Yeah, I think we can park it here. We picked ourselves a terrible. So now let's do some reviews, right? Let's go back. Let's just look at the overall trend, looking at why did we lose money. So we lost money.
Yeah.
Trying to figure out why did that happen, right? So you look back at the period that we traded. Number one, we started trading this chart right at the top. This is in hindsight, right?
Yeah.
It isn't surprising that we were whipsawed because at the top and at the bottom, there's usually heightened volatility because there's a lot of panic at either extremes.
Yeah.
Right?
Okay.
So there's a lot of volatility that we find ourselves in, right? But did we do the right things, right? Let's go back to the first trade. Because we're not privy to all of this. We didn't know all of that was going to happen, right? Let's look at the first trade. Was the 50 above 200? Yes, right? Was the stop in a good enough distance? Of course it was, right? I think that's where we started. 50 was above 200. Did we give the stop loss enough room? Of course. Did we monitor the trade correctly? We didn't preempt anything, right?
Yeah.
And then we did that and we exited as per plan with a stop loss. And did we wait for another trigger? Yes, we waited and we got it there, right?
Yeah.
We gave our stop loss some room. Yes, we did. I mean, look at that distance, right? And then again, similarly, we followed the rules. So traded well. We were just unfortunate to be trading the top, right? And then what else did we do? What else did we do right? What else did we do right? What else do you think we did right? Other than taking the right positions that ultimately lost us money.
Well, I think not jumping in on the low there.
Avoiding all of that.
Yeah.
Right? That we did impeccably well. Right? Avoiding a loss in a bear market is as good as profit, man, because it is literally money in the bank. Because
Yeah.
we were sitting in cash for all that period. Right?
Right.
Sitting in cash for all the period. And that cannot be taken for granted. You cannot take that part of your trading for granted. Having the ability to wait for the correct time to enter the market is as good a skill as knowing when to buy or sell. In fact, if not better. Right? The discipline to wait for the right opportunity to come. Look at a cheetah, man, when it hunts. Right? When a cheetah hunts, the cheetah is one of the fastest animals on the planet. And
Yeah.
Definitely one of the fastest, if not the fastest in the safari, right? But
Mm-hmm.
but when it hunts with patience, right?
Mm-hmm.
It waits until it is in a position that it has a high probability of catching its prey,
Mm.
and then it becomes laser focused on that one prey.
Yeah.
You know, so that's kind of how what we do as traders. We wait, we wait patiently. We wait with our guns loaded for opportunity for the time where opportunity presents itself. Other than that, we do
Mm.
nothing.
Yeah.
We wait because doing something when you're supposed to do nothing will mean when the time comes to do something, your gun will be empty,
Yeah.
or
And I feel you.
with a very low number of ammo,
Yeah.
right? So you want to protect your capital at all times, and you want to protect your mental capital at all times, right?
Mm.
Because even if you financially survive trading that bear market day, even if you financially survive,
Mm-hmm.
right? But how is your confidence now,
Yeah.
right? How confident are you to be? I mean, we took. Let's see. Where's PSA? We took one, two, three, four, five, six, seven, six trades in a row
Mm.
that lost us money, right? Now,
Mm.
if you add all of this, imagine the number of trades we're taking in a row,
Mm-hmm.
the number of losses we're taking in a row. Say 20, right?
Mm-hmm.
How confident are you to taking the 21st trade,
No, not so much.
right? But how confident are you to take the next trade when it presents itself, checking all checking all the rules that you've got um, for your trading system after having waited for so long without doing any damage to your capital and your mental capital,
Yeah.
right? There's an argument to be made that you can't be sitting for the whole year without trading. You'll get rusty.
Mm-hmm.
And that's a fair argument, right? However, during this time, you sharpen your axe in a different way. You're reading a book. You analyzing past trades. You're talking to other traders. You're learning. You coming back to your simulator. You're trading the simulator while waiting for opportunities to come, or you're trading
Mm.
other instruments that do present opportunities to you, right?
Yeah.
And if all of them, for example, in March, and the crash that we saw in 2020 of March, everything was just falling,
Mm.
right? And then if you're a long only trader like I am, there's nothing to buy,
Yeah.
right? Everything is falling. What do you do in the interim? You sharpen the axe.
Okay.
Sharpen the axe. You're reading the books. You're picking up technical analysis books. You're picking psychology books. You trading simulator. You're keeping yourself sharp. You don't need the
Mm.
markets to keep yourself sharp. You don't need to be trading all the time to keep yourself sharp as a trader.
Yeah.
It's not only the markets themselves, or it's not only trading that can keep your X sharp. You keep
Mm-hmm. Mm.
your X sharp elsewhere while keeping your confidence intact. So that when that low hits in August, September, man, your gun is fully loaded.
Yeah. Not feel you.
Your gun is fully loaded. You're ready to pounce, right?
Mm.
And what happens, you make up their return within 3 months. You
Mm.
make a year's return within that 3 months where the market is starting to turn. And maybe not, because bottoms are just as volatile as the tops. Maybe you're getting screwed there. But that's like you see that as a, let's call it a warm up,
Mhm.
right? Where you're doing the right things, but the right things aren't working just as yet.
Yeah.
And then when the market turns properly and starts to rally, man, you're in.
Yeah.
You're in. You know, and that 2020 crash, that in was around November, December. You in, you're well positioned because you're there, you're sharp. You know, your capital is intact, as opposed to the people that were trying to call bottoms throughout the crash,
Mm.
right? Every trader that thought this is ridiculous, these stocks are cheap.
Yeah.
Mentally, they took quite a hit, right? Of
And
course,
I
of
feel.
course, of course. There's the possibility that you're going to pick up Sasol at 24.
Mhm.
Of course, there's that possibility. But are you a gambler hoping for a big win,
Mhm.
or are you a trader with edge, waiting for the odds and the probabilities to play themselves out? Right?
Yeah. Okay,
You're
cool.
not a gambler. You're the casino. You're not a gambler. You don't take excess risk. You don't take
Yeah.
positions that don't have an edge.
Mhm.
Right? Sasol at 24 Rand, at least from a technical analysis perspective, didn't have an edge. Right? It just simply didn't. But, but, it could be a winning trade. The question is not, it's not whether or not it was a winning trade or not, right? The question is, if you do the exact same thing time and time again, how will you end up?
Yeah.
If you keep picking up stocks simply because they've fallen 70, 90%, man, you're going to get taken for the cleaners. If
Mhm.
that's the only rationale to be picking up stocks, is that they've fallen 70, 80, 90%,
Yeah.
right? You're going to get taken to the cleaners. You got to pick stocks because they fit your rules. Your rules say buy. Don't just pick stocks because for the simple reason that it is fallen X%, right?
I feel you.
Cool, cool. So, do you have any questions for the day?
No, no, it's all good. I think this was good.
Lessons that you picked?
I think mostly you have to wait.
Okay,
That's the big one.
okay, patience.
And also adjust the size if
Yeah,
things are not. Well.
yeah, okay. So when things are not going well, reduce size, man. Reduce size. But stay on the crease. Keep the bat on ball, right? You just
Yeah.
focus on making contact with the ball. You reduce size. Perhaps if 1% is hard to take, you drop it to 0.5%. I mean, this was massive amount of capital, 150,000. That's a lot of money. That's a lot of dollars, man.
Yeah.
$150,000 is a lot of money. Maybe you drop your risk to 0.5%, a quarter of a percent, just to make contact with the ball,
Yeah. Yeah. Definitely.
right? You drop your risk up to a quarter of a percent, or 0.5%.
Mhm.
But once you start to get back in the rhythm, now you start to feel yourself in the zone, start increasing size small by small. Maybe you raise your size to 1%, and then maybe 2. And then now you're back in confidence. You're pushing a normal size. And then
Mhm.
you get your head beat down again. You don't stop trading simply because your head is getting beat down while you're doing the right thing. Right?
Yeah.
It's not a good idea to stop trading because you're getting beat down and you're doing the right thing. Better thing to do is reduce size.
Yeah.
Unless of course that beating took a heavy you took a heavy psychological blow from that beating. then you need time off the markets. They'll be there when you come back. You need time off the market. You need to go clear your head. Don't look at charts for a while, maybe a week or two. Come back with a much clearer head.
Yeah, no, I
Right?
feel you.
If that blow you can feel, man, it's which is why mindful exercises are helpful for traders, particularly day traders, because
Mhm.
it helps you monitor and regulate your emotions, right? So if you
Mm.
close your eyes and breathe deeply, you start to notice how you feel on the day, how you feel. Let's say you've had a tough day, taking loss after loss, you down say 10%. You close your eyes and breathe and notice how you feel, right? If that feeling is strong and it's depressive, tomorrow you're not going to be seeing opportunities. Go take a break, clear your head, go run, play
Yeah,
soccer, play golf, something, do something. Go do arts, play music. Just stay away from the markets until your head is back in equanimity and
yeah,
your head is calm. You are back in a calm state of mind so that you can enter into that zone state again with relative ease. So you don't have any more tensions in your body, you don't have tensions in your mind. You're ready to trade effectively. But if your
mm,
confidence is still intact, but your capital is getting beat down, just drop size
yeah,
so that you protect your confidence, so that you don't find yourself at a point where you have to take a break,
yeah, no, I feel you.
right? And you can systematize that process as well. You could say, you know what, if I find myself, because you have to notice yourself, right?
Mhm.
That once I hit a 20% drawdown, my confidence gets hit. I start to feel strong negative emotions, right? So
Mhm.
you know your threshold is 20%, right?
Yeah,
Because you've monitored your emotional stability, um, how you react emotionally at different points um, of the drawdown. So if you know that okay, if my drawdown hits 20%, things start to go wrong mentally for me, right? So you know your threshold is 20%. So you know you can't lose 20%. You're not gonna react well. You know yourself. You gotta know yourself. You gotta know yourself, right? You,
yeah,
at
okay.
least you gotta make an attempt to find out who the hell you are
Mhm.
if you don't know yourself, right? Because man, that's not an easy question. Who are you is not an easy question. Just like you know, tell us about yourself is a hard question on a job interview, right?
Yeah,
Because knowing who you are is not an easy question. So you gotta know who you are,
yeah,
right? You know, okay, 20%. I don't react well to a 20% drawdown, right? So what do?
Mhm.
You say, okay, I'm gonna allow myself a 15% drawdown before I take a break. So you don't allow yourself to get to the extreme, right?
Yeah,
You set up a rule that says if I hit a 15% drawdown, I stop trading.
okay, cool. No, I
Stop
feel.
trading for a couple of days, stop trading for a week, whatever the time it is, you stop trading, right? And then you look at that 15%. You want that 15% to hit by as many trades as you possibly can.
Mhm.
So once you start approaching 50% of that 15%, you cut your size in half.
Yeah,
You want to get to that 15% drawdown with maximum number of trades that you can take.
mhm.
What you're essentially saying is that it's okay for the market to take your money because it will from time to time. It's okay for that to happen, but it
Mhm.
better work goddamn hard to do that,
Yeah, no, I feel you.
right? Because if you maintain a 2% risk, you're gonna get to 15% very quickly. But if halfway through that 15% you see, okay, I'm halfway through, you drop the risk, you drop your risk in half. Right? Now you have a 7% leeway, but with half the position size. Right? You hit half of that, maybe you add a 10% drawdown. You cut the position in half again. Right? And maybe now you're sitting at a 12% drawdown. You slice that in half again. Maybe now you're trading only 0.25%. Right? And if that 15% hit, man, it was meant to hit.
Yeah.
Because Lord knows you tried to stay in the game, given that constraint in mind, for as long as you possibly can. So self-management, money management goes hand in hand with self-management.
Okay.
Cool. So yeah, man, we're gonna park it here. Tomorrow you're gonna be you're gonna be doing stops and position sizing, and then we're gonna take it from there.
I'll come. See you tomorrow.